I wouldn't advise anyone to invest in anything they don't understand. I just think that as more and more people discover that their money, that their pockets had a hole in it by design, they're now going to have a pocket where there's no hole in it. Versus sell pressure, you're going to see an increase in the price. More people trying to get their hands on few Bitcoin, and or even if you hate Bitcoin, you're probably going to need some at some point.
With society at a crossroads, with the world uncertain about the future, what happens in the next few years? Technology leading the race. With global debt levels going out of control, governments printing money, governments taking on loans, and the uncertainty all around us, whether you're a business or an individual, the question is, where do you find the return? And so in today's episode, guys, we have in studio Irshad Padia, a Bitcoin enthusiast, and he says this because he's too humble. He is the creator of 3 courses so far on cryptocurrency for leading global universities, which we can't mention because, well, his phone won't stop ringing. And currently works for one of the leading companies in education technology worldwide. And guys, before we continue down this conversation, the disclaimer obviously around this topic is this is not investment advice. This conversation is arranged on behalf of an enthusiast that is highly educated around the topic and is continuously learning and developing that school of thought around cryptocurrencies worldwide. So, again, this is not investment advice. Let's carry on with the discussion. Thank you, Irshad, for being here. It's great to have you on the show.
Thanks for having me on the show, Nabil. Happy to be here.
I'm so excited for this one because I'm just going to say it out there. I did buy Bitcoin, as a financial planner with all the questions around 2017 and it was going crazy. I figured, nobody's registered to give advice on Bitcoin, and so I'd rather see what this is all about. I had bought Bitcoin a little bit earlier than most people. It went up in value and I sold it and took my profits and actually played a part in a lot of the communities, the WhatsApp chats, the forums, just to get a bit of insight. And I never really got back in there. So Irshad, straight into it, having a chat with you beforehand definitely got my brain up to speed. I'd prepared questions for this interview and, it was deeply insightful when it comes to the understanding of Bitcoin and how important it is if you are trying to get a deeper meaning or viewpoint on the topic to understand the history of money. So I'm going to let you take it from there to set the scene, and I'm going to take you through what I have for you.
Perfect. All right. So when societies wanted to trade, they used what we call the barter system. So the barter system, people would trade, for example, fish for maybe pieces of weapons, for example. And obviously it worked in small groups of people, in small villages and stuff. But as people wanted different things, it became more complex, right? Say you wanted a weapon, but the guy who makes the weapon wants fish, but you don't have fish, you got eggs. It becomes complicated. So societies needed something to use as a medium of exchange.
Of course. So exchange of value in a contractual point, right? So money being the store of ultimate value and pretty much a contract, right? Between people in order to exchange something for something else of value. So money being a contract, right? And things of value being a contract, right?
Correct, yes. And also in that, so money plays 3 roles, right? It's a medium of exchange, it's a store of value, and it's a unit of account. So those are the roles of money. And so society started using shells as money. In their neighboring area they lived in, They'd pick up rare shells, and people would want that because, I mean, it looks cool. Eventually, you know, like people would trade it with others for services and goods. And that evolved in other countries. They use like glass beads. In North Africa, it was called agri beads. And I actually have a great story to tell you about agri beads, and which displays the concept of why it's so important to have a proper money. But we'll get back to that. So over time, people discovered precious metals, and they would use that as money. So silver, gold, it would be chunks of silver and gold, and merchants would weigh it upon transacting. And over time, like societies started standardizing these monies. So you'd have standardized unit of gold, a gold coin, a silver coin, that sort of thing. So in the Roman civilization, I think the denarius is a famous gold coin, and it had a certain amount of gold, of grams of gold in that coin, and that was set. Over time, though, what had happened was that some rulers, some Roman emperors, realized that they could extract value from people by changing the values of gold in each coin. So citizens who expect maybe, let's say hypothetically, I don't know the exact gram off by hand, but let's say there was 7 grams of gold in a coin. And then this other emperor comes along, he realizes he can extract value from people. He changes that to maybe 6 grams of gold. So you're taking a little bit off there. Maybe no one will notice. And then you can just pocket the rest. So that's what happened over time. And it's a process called coin clipping, which effectively debases the currency. The people using the gold coins in the market over time would realize that, this is supposed to be a 7-gram gold, but it's not actually 7 gram. It's actually mixed with a bit of, whatever other precious metal. And over time, that led to a lot of greed by the money printers, effectively, right? So the mint, who created the gold coins, had this unwieldy power to decide on the value of the gold in the coins. And obviously, naturally, people, emperors who ascended to power would use this. I mean, what's the quote? Absolute power corrupts absolutely. So people who have emotions of greed and that sort of thing would naturally use it to their advantage. People are incentivized to act on their own behalf instead of acting on the good of the people. So there's theories that even that coin clipping process led to the demise of the Roman Empire, because like militias wanted to be paid in gold, and people didn't trust the money. So it led to all sorts of chaos in those societies. So fast forward a bit, we had society using the gold standard in the early 1900s. And with the gold standard, they had to basically physically have gold in their vaults before they can lend out money, right? So you say if you were a merchant during the gold standard, you would deposit all of your gold at the bank. The bank would give you like promissory notes, or which eventually evolved into fiat currencies, or like dollar bills, for example. So they'd give you dollar bills, and the dollar bill is representing the amount of gold that you have, right? It's like a bearer asset. So if you could go to the bank with your dollar bills and say, I want to swap my dollar bills for gold, and they'd give it to you. So it was transferable at all times. At some point down the line, when governments realize that, gold is acting as a check on their spending and on their monetary decisions, they realized that they could benefit if they went off the gold standard and halted gold withdrawal or gold convertibility, right? So I think it was President Nixon who halted the convertibility of gold, so, which basically said, you can't come to the bank now and get gold, you just use dollars. So they went off the gold standard, but since people were so used to transacting in fiat currencies, it went on, things worked. In the meantime, central banks around the world could now print money with very little, and the result was an increased amount of money in the economy and a devaluing of the money that people hold.
Correct. Modern day inflation, right?
That's the basis for inflation. So going back to the agri-beads example in North Africa, now we rewinding back hundreds of years, right? So in North Africa, some tribes, I think it was West Africa, used agri-beads as their money. So these were glass beads that would take long for them to create. It would have an aesthetic quality. It looked cool. People would use it for trading. It was like relatively small, so trading was easy with it. Some European explorers came to this particular tribe. They realized that these people were using these glass beads as money, and they didn't want, like, their fiat currency, their bills or whatever they were using. So they wanted to buy these people's labor. So they realized, okay, look, we've got the technology back home. Let's go home. Let's make these glass beads that the West African people liked, and let's come back and let's trade it for, for their labor. So they did exactly that. They came back and they gave they traded with the West Africans. And what that resulted in was an influx of new supply of money into that economy. And with the influx of new supply, it doesn't automatically create new wealth. It just changes the measurements of wealth. So these people would trade it in exchange for the beads, but over time they'd realize each bead that they have now has less purchasing power than it initially had. So effectively, their wealth got extracted by the European explorers, and these people became so reliant on the beads, and they had to work extra hard for the beads now because it has such much less of a value, and they were actually basically converted into slavery. They were slaves to the European explorers, and their money was destroyed because it wasn't a hard money with a fixed supply or a limited supply, and it was easily forged by the Europeans. So coming back to the present day, we have a fiat monetary system which governments
can be printed.
can print as needed. So if I'm America, for example, and I decide tomorrow I want to wage war with some Middle Eastern country, I could theoretically print money. Instead of going to each person and saying, hey, give me 5% of your wealth, we're going to use it for a war. Most people are going to say no, I'd hope. But if they just print the money and go to and fund the war with that money anyway, it's effectively the same thing. You're taking money from people, but through a roundabout mechanism, right, of inflation. So the more money they print, the more inflation the society gets, the worse off the people are, because now they're using devalued money. And people just won't trust that currency anymore in the long term. So that's what happened in Zimbabwe. We see it happen in Venezuela. Lots of emerging markets are experiencing inflation. A lot of first world countries might not be feeling those effects yet because they have currencies which are dominating in the world that we live in, right? There's a lot of demand for the US dollar. If they print US dollars, there's a lot of countries that will still buy US dollars because they settle debts in US dollars, and transactions happen on the dollar.
Well, I mean, this is technically what happens in the standard, right? Creating the standard of the US dollar. And I don't know if you've read that book, Confessions of an Economic Hitman, right? So these are targeted strategies, not necessarily, it's to gain power, if you go back to your African bead stories, right? And I mean, we know this happens. And when it comes to modern day economics, however, we fast forward to today with the amount of printing money, loans, all things considered, what makes it a compelling future? I want to take this back actually. Let's look at today in the last month, and we take it directly to Bitcoin, right, Irshad? In the last month, the price of Bitcoin has skyrocketed 50%. It's now trading at, $17,000. I mean, we can circle around to what's happening in the world and the justification of it, but let's start there. Why has this thing jumped by 50% in the last month when people thought this was a bubble in 2017? What's the cause of all this demand?
So the massive volatility we see in Bitcoin is a result of buying and selling, right? So when there's an excess of buying pressure versus sell pressure, you're going to see an increase in the price. More people trying to get their hands on few Bitcoin would naturally lead to a price increase. And the vice versa is also true. If there's a huge sell pressure versus demand pressure, you're going to see a decrease in the price. So in the last month, Bitcoin, as you mentioned, went from $17,000. I mean, from $11,000 to $17,000. But if you do a search trend on the term buy Bitcoin, and you look at how that has performed relative to the 2017 bubble that we had in Bitcoin, people aren't searching or talking about Bitcoin. I believe this rally is an institutionally led rally. We have lots of hedge funds who are dipping their toes in the Bitcoin market. We have lots of companies who have announced that they've bought Bitcoin and they're holding Bitcoin as part of their reserve asset. There could be countries that are buying Bitcoin. They haven't announced directly, but many countries have been looking at at cryptocurrencies like Bitcoin, looking at providing alternatives in the form of central bank digital currencies, which we can talk about later on. And a lot of them are paying attention. And I think that has been driving the recent price rally. The fact that a lot of the early mined Bitcoins aren't even up for sale, they're in cold storage. So the amount of Bitcoin on the market might be actually very little. It might be just 3 million of the 21 million coins that are actually up for sale. Then we also have companies like Grayscale, who I think in the last few months bought up 75% or something ridiculous of the newly mined Bitcoin. So a lot of these companies understand Bitcoin scarcity. They understand that its value isn't really priced into its current price, and they're taking advantage of that. They're buying Bitcoin very cheaply, and that is resulting in the price increase, in my opinion.
So, okay, supply and demand, the cause of obviously the spike in price of Bitcoin. Two questions, Irshad. Is Bitcoin an asset class? And secondly, does this not necessarily mean that a company could be taking advantage of that supply and demand by nature of the limited supply and the Bitcoin whale theory? So the theory that one person can hold a large amount of Bitcoin and influence the supply and demand. You see, I asked those separately, and you can take it from wherever you'd like. I asked them together is simply because, firstly, what's the basis of Bitcoin, right, as an asset class? It's this new thing. One can imagine the beauty of a non-centralized currency considering history. But the fact is it isn't, and there's a lot at stake, right? And secondly, the ability for one person or an organization to influence the price so radically.
Okay, so in 2008, during the financial crisis, on an obscure forum on the internet, the Cypherpunks forum, these people are interested in cryptography and the internet and communications. There was a white paper that was released. So it was released by Satoshi Nakamoto. No one knows who Satoshi is. It could be a person, it could be a group of people. We still don't know. And in the white paper, Satoshi talks about a peer-to-peer electronic cash system. So even in the first block, okay, so what Bitcoin is basically it's a digital ledger, a decentralized ledger that everyone has access to. So in the banking system, bank accounts are basically, you can think of them as like debits and credits. The bank has the money. If you draw money into your account, they credit your account and right? So Bitcoin is just a digital ledger that's transparent. So every single transaction that happens on the network from its conception in 2009 is recorded on the blockchain, right? So it's not, it's pseudo anonymous. It's not totally anonymous. So what that means is, like, if you sign up on an exchange to buy Bitcoin, the exchange might have KYC procedures, so they'll know who you are. But in Bitcoin, when you're transacting on the Bitcoin network, you're just dealing with addresses and numbers. There's no names or any of that involved. So what the Bitcoin is I can go online now, send you money, send you Bitcoin, without asking the permission of any third party. So with the banking system, if I want to send my aunt money who's overseas, I have to, request the bank to send it to her. It goes through an intermediary. There's sometimes multiple intermediaries along the way. Each of them take a cut on your transaction. And by the time your money reaches your aunt, it could be 15% of it gone, right? So a lot of people send money overseas, like a lot of migrant workers send money back home. That's called remittances, and it's very expensive. So what Bitcoin allows is you to store your money in Bitcoin and send Bitcoin without asking a third party permission. So it's just basically like a peer-to-peer exchange, which is something the world didn't have before this.
But what about something like M-Pesa?
Yeah, so M-Pesa also relies on traditional payment rails. So it works. I haven't used it personally, and I don't know too much about it, but it works for the intended purpose. But if hypothetically, if a government doesn't like an individual, they can block them out the network. For example, the United States have mentioned that they've used, they use the US dollar as a weapon. Since it is the global reserve currency, if they want someone, for example, they had issues with Iran, they threatened to kick Iran off the SWIFT network, which deals with international payments. And that would leave the people of Iran in a dire situation without access to the international banking system. So even if the US has a problem with the Iranian government, the people would suffer. And that's not really a fair system.
So it's completely independent of governments, right?
And yeah, that's the theory.
The theory. And it's largely understood by the Bitcoin community and the few that really, the massive public, let's put it to you that way, that kind of understand Bitcoin to be this thing that you can buy. It grows a lot, and it's probably going to be, or could be, the currency of the future, right? And so far what we know is it was a big bubble. We've got financial people, especially traditional financial services, looking at it and saying this is just another bubble, right? Reference to tulips. And then we've got a large following of Bitcoin people that went through this phase of buy and hold, right? And speculation, huge price swings, and funny enough, where the world is today, a 50% increase in demand, those conversations have started again. So where do you even put this into context? Because as far as I understand, right, Irshad, the Bitcoin is a finite thing, right? So it will run out at some point based on this process of mining, right? So people use their computer power and they mine Bitcoin. Some of these are small businesses at the time when those prices were high. No doubt some people might pull out that old hardware and see if it still operates and start increasing the electricity bills to start mining Bitcoins in order to sell them, right? To realize fiat currency, traditional currency today. Obviously, the more enthusiastic, understanding people, as you mentioned in the introduction, the true essence of understanding it, might be keeping those, right? But again, you will be able to mine Bitcoin, and it's expected that the last Bitcoin to be mined in this discussion of supply and demand that drives the price largely today, and the speculation of it, will be in 2145, 120 years from now. This is the extent of my knowledge today as a potential investor into Bitcoin. I'm looking at it as a gamble, right? Coming from financial services with limited understanding. And a lot of people are looking at it as an opportunity for growth, right? Speaking of this increase in demand from institutions, clearly some asset managers are, or maybe thinking, you know, I'm not sure for certain, but people are looking for that return in the world. So, to the day-to-day investor, why invest in Bitcoin when there's so much uncertainty today? Should you invest in Bitcoin?
So I wouldn't advise anyone to invest in anything they don't understand. So the first step would be to understand what Bitcoin is. You know, like just going back to that quote, right? People say don't invest in what you don't understand. Yet so many people invest in many things they don't understand. Does the average person understand how the fiat system works? But they're happy to keep their money in fiat currency, in rands or dollars. They're happy to invest in stocks. They don't have an intimate understanding of how the stock market works. So I'm not sure if that concept applies, right? So the first step would be do your homework, learn what Bitcoin is, why we need Bitcoin, and then if you want to, put a small amount of money in it and see how it performs. You have, so everyone has options with regards to what they invest in. And if you look at historical performance of assets, you know, the stock market has been going up for a long time. This year, it's been a bit shaky, but the more money they print and the more assets that central banks buy, you know, that's one of the reasons why we have this always go up stock market.
Well, I mean, the economy runs through debt cycles, right? And we look at it in the sense of people invest. There are pretty much four asset classes, right? The value of companies, because companies, private or listed, public equity, private equity, grow in value based on the decisions that they make, right? So this is, you can buy a share in a business that is transacting in the economy and increasing its value, right? Then you've got your property, which is an asset class. You've got bonds, which is a promise between people in a contractual form, as well as cash equivalents, right? So in your major asset classes, really the only then next level of diversification is the offshore versions of that, which tends to be run by different currencies, right? Your dollar, your rand, your pound, your euro, etc., and all your global currencies. Now, if I were to put this into context and then ask the question, something today you can trade in dollars. Speculation on the true value of a currency and where it could be heading, and you trade in, it's a big thing right now, foreign exchange, making money on that. Bitcoin seems to fit in that, except it's not technically a valid, it's more thinking along the lines of commodity, not necessarily an asset class. So would you say Bitcoin is an asset class, or is it just a speculative commodity at the moment?
So that's a good question, and it's really difficult to sort of put Bitcoin in a box. The traditional financial system has, these boxes for things like asset class or, equity, currency. How I would describe it is, assume we in the early 90s and the internet is just sort of becoming mainstream, but it's just the nerds that know about it, and no one else cares about this nerd thing that they're doing. But you, as someone who maybe follows those trends, technology trends, you have an idea that, this has bridged communication globally, and it's going to grow, and it's going to be, the future of the way people communicate. Now, back then, if you said that, you'd probably be laughed at as a madman, or like you read too many sci-fi books or something. But if you think about the future, like, are we really going to use a money that's decided by like a bunch of old men behind a boardroom door to decide what's best for society? Because that's what we're currently using. The Federal Reserve in America, the US dollar, is decided, and the amount of money they print is decided by a very small amount of people. And these are all unelected people, by the way. So, whether people vote Democrat or Republican, they're both going to get the money printers started, right? So you're going to get screwed over from all directions. So the money of the future, if you had to design this hypothetical society and you're designing a perfect money, or close to perfect as you can be, you're not going to leave that group of 10 people to decide what's best for the billions of people in the world. That's a recipe for disaster. Those few individuals will just make decisions that benefit themselves at the expense of everyone. And that's the situation we're in. So.
But, Irshad, okay. So, I mean, I get that school of thought. But what about the timing, right? So, hypothetically, Bitcoin, let's assume it's the currency of the future. It's altruistic. It's fair. It can benefit the world, right? The reality is, at what point in time, right? We mentioned 2145 till all the demand, and fair enough. Let's put it to you this way: if we were to compare this to gold, right, which is commonly a point of discussion, not all the gold is come out of the ground, right? But there's a value attached to it. I mean, where does the transition start? Because market cap of Bitcoin is 318 billion today in US dollar value, actually. So it's kind of pinpointed on the value of US dollars as it stands, right? A fiat currency. The price today is 17,150 US dollars. This could change by the time this interview airs. And up 50%. Where does this transition, if in relation to fiat currencies, if you look at the amount of money in the world, is an incredibly big number, and yes, more will be printed. When you look at debt, right, which is what really people have used to buy their assets, which is why we have economies and cycles and the need to print and raise interest rates and everything economy, leading up to this very moment in time with the world as it is, the confusion of capitalism and what is this new way of getting out of here and solving this problem. I mean, even if, let's entertain the scenario that there could be a conversion here or an adoption of Bitcoin, how would you see that playing out?
So I'd see it playing out exactly as how it has been playing out since 2009. So at the start, it was just the basement dwelling nerds um, that no one paid attention to. Then it became like the narrative according to the media was like, oh, it's a scam, it's a Ponzi, and it's gonna die. And the media actually declared it dead hundreds of times. There's even a website called, I think it's Bitcoin Obituaries, and it posts pictures of each time a newspaper or a mainstream publication declared the death of Bitcoin, right? So that transition, that adoption, it's happening. It's slowly happening. It's only been 11 years. You know, we're looking at many more decades of the transition. And in the process, while some countries are printing themselves silly, they are going to find the use case for Bitcoin in money that can't be stolen from you. You can take possession of it, and no government can come and say, we're printing more Bitcoin and now your Bitcoin's worth less, So that's the use case of it. It's hard money, similar to gold, but with more attractive properties than gold.
Attractive properties. I'm going to go into that, but I just want to kind of set the base because I have a lot of questions up here. Let's start with the risks of Bitcoin, right? Bitcoin in its true form, like you say, is a ledger that cannot be erased, right, or edited. I'm pretty sure I've heard the news that over the years that somebody has been able to hack the system, but more importantly, the more realistic risk is the fact that because it's internet-based, it's the wallets that you hold your currency in that really is your form of protection. And I mean, we're finding large organizations getting hacked. Isn't this a bit too much of a risk at $17,000 a coin and a strategy to accumulate or invest in such a thing? That's a lot of uncertainty, There's also then to add to risk is reputational risk. We know that Bitcoin, for its properties, its ability not to be traced, has been adopted widely by the black market, right? For a whole lot of illegal matters, which that's been painted negatively in crime, right? And then we have this huge volatility, which I understand your explanation. It's coming from the sense of this is something relatively new, and we've got human behavior that dictates the waves through speculation, increased demand. You mentioned something in our chat earlier that even the people that burnt their fingers in Bitcoin, by nature of human behavior, as you see this bubble rise again before it may pop again, and these waves will still come back to say hi and transact. But don't you think how do you get such certainty in and amongst all of this potential risk?
Look, there's nothing in life that's certain, Bitcoin has its risks, and so does other investments. I heard you mention earlier that like the network got hacked or something. So I'm not sure what you're referring to there, but the Bitcoin network has not been compromised in its 11 years that it's been running, right? The network has the uptime since 2009. What the hacks that you do see is, for example, crypto exchange can get hacked if their security is not good, and if people store their Bitcoin on an exchange, it can also be compromised. So it isn't good practice to keep your Bitcoin on an exchange. What a lot of people will have to get their heads around with Bitcoin is they're going to be responsible for their own money. There's no bank to hold your hand. Like if you send your transaction to the wrong account number, you can phone your bank.
It's gone.
They can reverse it, right? But with Bitcoin, like that's not an option. If you send your money to the wrong address, like that's your money gone. If the person on the other side of that transaction doesn't want to send it back to you, like I don't think you have recourse. So it's a
Which
very
leads me back to the future, right? I mean, who's stopping a bunch of clever guys in this scenario as it's unfolding to ask people to send them their bitcoins, and they act in their human responsibility as a bank, because behaviorally we already can predict that humans will be humans and they'll need help and support, in which case Bitcoin becomes the new current standard way of operating a monetary system. Just call it maybe a global currency.
Yeah, so as the market matures, we're going to see infrastructure being developed. We already are seeing infrastructure developed around the space, around the Bitcoin space. And we have companies like, for example, Fidelity Investment Managers, who they have a branch called Fidelity Digital Assets, and that they act as a custody, they take custody of institutional Bitcoin. So if you're a company, say you are a hedge fund manager, and you're not comfortable keeping your Bitcoin on an exchange all by yourself, you'd go to Fidelity, and they would basically have that same sort of service that a bank has. And that might be a better option for a lot of people, because many people won't have maybe the expertise or the time to find out how to, conduct this perfect security of your Bitcoin storage. So there will be those institutions that serve that purpose, and I think it could be a much more healthy ecosystem at the end of the day versus the current system.
So the only then control would be the printing of money, because this is very similar to the situation you pointed out from the Roman times, where you kind of see that shaving of the value of your currency. Especially you put it in the hands of humans, because that was based on the idea of greed, right? And so this all I just imagine would be in this greater scheme of the Bitcoin being more adopted, widely adopted. It's probably more of an obstacle, wouldn't you say?
So just going back to what you said, so if Bitcoin, I mean, if all humans, all politicians in the world were honest, and they weren't out to steal from each other, and we could trust them fully managing the monetary system of the world, then we probably wouldn't need Bitcoin. So, people have to decide, do they trust people, politicians, or do they trust code, which they can review and look at and is transparent? Because that's the two options we have in front of us right now. You could verify for yourself the supply of Bitcoin. There's only going to be 21 million. There's no one can start creating more Bitcoin out of thin air. It just won't be accepted by the miners in the network. Or do they trust politicians who, over the course of a century, have devalued the dollar over 90%, maybe 99%. I don't know the exact figure. But if you just Google the devaluation of the dollar, you'll see a lovely graph of how, since the Bretton Woods came into effect, and how they went off gold standard, it's like a constant decline over time. So that's the choice people have to make, and no one can make it for them. Bitcoin is it's a optional thing. No one's forcing you to use it. It's a voluntary system, and I just think that as more and more people discover that their money, that their pockets had a hole in it by design, they're now going to have a pocket where there's no hole in it, out of economic necessity. And some people might say, "Oh, fiat currencies are working, you're exaggerating," but they're probably not from the Lebanons of the world or the Zimbabwe's, where if people had knowledge of what Bitcoin is, they could use it and preserve some of their life savings instead of watch it get wealth, stolen.
Okay, so I mean, you make fair points, right? And considering the world globally, but where's this tipping point, right? Let's say people start using Bitcoin. You can't just let go of fiat currency because your world revolves around normal day-to-day money. In fact, the money that you have is probably not in your pocket. It's more of an IOU, which is the amount of debt, right? And that tipping point, the conversion, surely means, like, how do you see it playing out? And then I'll continue if it suits what you're saying.
Okay, so in all of this, since Bitcoin came out, lots of central banks have, as I mentioned, been paying attention, and they realize that there's a lot of demand for Bitcoin in the open market, and if they don't do anything, they might lose a lot of their power. So they've been exploring central bank digital currencies, which is basically like digital version of the dollar or the rand. Even the South African Reserve Bank has been exploring CBDCs in the form of Project Coca, which was their wholesale settlement CBDC system. So what these systems are, so there's the retail version and the wholesale version. So the retail version is what people would use to transact with, right?
Transact, yeah.
Yeah. So
And the wholesale version would be what governments lend or print, for example, to give to banks.
yeah, so the banks would trade in the wholesale CBDCs, and the people would basically use retail CBDCs. So what CBDCs would allow banks is to go fully digital. Like currently, a lot of money is in cash, and those banks don't have direct oversight of where that money is being spent. So cash bills have some level of privacy inherent in them. With CBDCs, they would basically be able to see all your transactions, whatever you're spending on, like all the detail, all that data would go to them, which is actually very scary. We know from the Facebook Cambridge Analytica scandals how dangerous data can be in the wrong hands.
So we've got two ways of looking at this, right?
Yeah.
Absolutely, from a privacy point of view, but at the same time, I am making the assumption that these digital currencies are being built on the blockchain, right? So the same ledger principle, correct? In which case this is added transparency, right? Because the world today is, you don't need a currency to know everything about you. You have a social media profile. Everybody knows everything about you, especially the government. In which case, there's a huge positive. I mean, you will know exactly where corrupt money could be flowing. Isn't that a good thing?
So ideally, it would be transparent, but that's probably not going to happen. We know governments aren't really looking out for people's best interest. I mean, a lot of people do think the government's there to protect them, but it's not.
But why so, right? Because I really believe in there are some great viewpoints in what our government's trying to do. If you look at the change in the economic principles, economic policy, the way they're trying to navigate this country to move it back to a better place, right? So, I mean, I could let that one slide over there, but it's nice to just hit a pause and get your views on that, bro.
Yeah, so I think, I mean, there's definitely a lot of good intentions sometimes, and there's obviously a lot of good people who work at governments, that sort of thing. But the incentive for the government is to stay in power, right? So, for example, let's look at American politics. You're not going to start as a presidential candidate. You're not going to start talking about how to be how to not print money and how to if you don't print money and you experience like an economic down cycle, it's going to hurt. No one wants that, but in the long term, the longer you like starve that off, the worse the eventual crash is going to be. So they're not incentivized to sort out long-term problems. I think a lot of them, and they also want to get re-elected. So they're going to say, oh, we're going to spend money on this and this and this, and talk about their large budgets. And that's what gets them votes. And when they can spend money like that, and money is infinite, they spend it. But like if they had, for example, hypothetically, if they had gold, are they going to start spending their gold, which is finite, in the same manner in which they spend fiat currencies? Probably not. Like, I just think the base incentives behind money affect so much of what strategic actions governments take and people take, that if you have a corrupt money that you're basing every action on, you're going to get, not ideal outcomes. And I think that's the situation we're in.
Okay. I'm going to take it back to the day-to-day investor, right? Why should they invest in Bitcoin?
Like since 2008 or so, I mean, the Rand at that point in time was, I can't remember exactly, let's say 8 Rand to the dollar. Since then, it's almost doubled. So your wealth that you worked very hard for and spent lots of time for just got cut in half based on, perhaps, let's say, some of that was based on a lot of corruption we had, right? So people don't really have faith investing in a country where there's a lot of corruption, and they'll rather invest in like a country that's more stable economically. So if you're happy to keep your money at the whim of some politician, then that's great, but it's probably not going to be a good economic decision long term. You want certainty, you want stability, you want to know in 10 years' time how much new currency is there going to be on the market of whatever you're storing your money in. And if you're talking about the fiat system, no one can tell you that. This year alone, America printed trillions of dollars, as stimulus for the coronavirus. They could tomorrow say they could announce that they're going to print another 2 trillion, 3 trillion, and in the short term, that might help the economy. But long term, what is it doing to the economy? It's a little sort of comparison that I've heard is like, it's like a heroin addict. Like if you give a heroin addict a bit of heroin, they're going to feel happy, but later on when they crash, it's going to be worse than what they were feeling initially.
So, Irshad, based on that argument, is a broken system needs Bitcoin to be the savior or the solution to it. I think it needs a bit more basis, right? Simply because, we say stability in currency. Bitcoin today, since 2017 till now, somebody puts all their money into this currency, into Bitcoin. What happened is that bubble popped. We spoke earlier about the waves before it gets adopted. I mean, it seems more of an altruistic, wonderful idea to invest in, but backed by what facts? In addition to that, so there's also different things. Bitcoin split into Bitcoin Cash. What is the difference between those two?
Okay, so with the Bitcoin protocol being open source in that everyone can see, what this software is running on, if you believe that you want to change something in the protocol, say you have an improvement to the protocol and you want to upgrade it, so you can fork the blockchain essentially and create your own coin. So you could create, for example, Khan coin, right? Now, whether Khan coin has value or not, that's up for the market to decide. So what happened with Bitcoin Cash is there was this guy, Roger Ver, who was actually an early Bitcoin investor, and he contributed quite a lot to the Bitcoin community back in the day. But I think what happened is he got a bit greedy. He wanted more control of the parameters of Bitcoin. He wanted to increase the block size. So the block size is, I'd have to explain mining to you.
Okay, so I got an exercise. If you can, because you literally wrote the course on these things. In 1 minute, what is mining, what's a block? And see if we can get that out.
So miners are incentivized to mine Bitcoin because they are rewarded with new Bitcoin. So each block on the network is a collection of transactions that gets broadcast to the rest of the network, and then everyone is now up to date with the latest block. And yeah, so that's pretty much how blocks work. And miners are always incentivized to be mining Bitcoin because they can, so they expend electricity in processing power. They're rewarded with Bitcoin. They probably sell some of that Bitcoin to cover their operating expenses. And then over time, maybe they keep the rest of the Bitcoin or they sell it. It depends on their decision. And over time, it appreciates in value. So when the mining, as there are more miners on the network, the supply is fixed. That's not going to change. So even if today, if you have 1 million companies start mining Bitcoin, it's still going to release that same amount of Bitcoin every 10 minutes to the network in the block reward.
Okay, so this is this I'm going to just recap here. The whole blockchain, specifically Bitcoin on the blockchain, is this series of blocks that are piling up, which are each transaction. That's why it's unhackable. That's why it's unchangeable. And in figuring out that next transaction, broadcasted to the world and different computer systems that are all connected, that's where information is kept safe and everything is kept fair, and the outcome is a coin, right? A Bitcoin, which holds value. You went on to saying that I could create something on the blockchain, call it Coin, and at some point somebody created something called Bitcoin Cash, right? And I know there are, I don't know how many coins there are, but there's things like ADA. Man, I used to know these things because I actually, in my splurge with Bitcoin, when I made some money, I said, okay, I'm going to see what all of these things are. And I bought 1,000 coins with all this extra profit, took out the money I invested. So to me, I was break even and I had this value that was transacting in coins. But if I can even remember the login to this wallet, there are pretty much packets of 1,000 of different coins out there, probably dictated on some version of return. But in my eyes, it goes up, it goes down. It's regularly speculation. So as an investment, I'm looking at this and saying, how long will it take for me to understand Bitcoin in its essence? What about all the other coins? And how long will it take me to understand that, allowing me to make an investment decision that's coming educated in between the world as we're translating to the potential need of something here, if it ends up that investment is actually my real currency.
Yeah, that's a lot in one question. But so there's thousands of other cryptocurrencies. As a rule, I'd say 99% of them are probably scams. They're used to enrich people who bought it early on, or the developers who hold a significant amount of that coin. For example, if I created Irshad coin and started, shilling it everywhere, and once the price rises up, I sell my stack to all those suckers who bought.
You increase supply and you've killed the price.
Yeah.
Now I'm saying, so all of them are scams, so to speak, right? And I'm understanding here that Bitcoin is the true one, right? Out of it, that would probably lead the way as you understand it and as you believe this to be the future, right? Because it was born from a white paper and it's completely anonymous. That being said, what about if I was the person that from the beginning bought a lot of Bitcoin as it came out that's in supply right now, and I hold a significant percentage of that Bitcoin in circulation today. Surely I have the power to manipulate the market.
So, like a significant percentage, I think Grayscale Trust probably owns one of or owns probably the most Bitcoin, and they own over 500,000 Bitcoin, which is, I think it's less than 2% of the Bitcoin supply. I'm not sure, but hypothetically, if you had, say, 50% of the Bitcoin in existence, which no one has, right? Because we can see all the addresses which hold Bitcoin on the network because it's a public ledger. But theoretically, if you had that and if you try to sell it now, it would result in a massive decrease in price because it's a surge of sell pressure versus demand. But what would also happen is over time is that money would move into people who have more conviction with Bitcoin over the long term, and you'd probably realize that you should have just held on to that money instead. So a lot of people sold Bitcoin early on. You can go on Twitter and look at people's tweets from 2013 talking about how they sold Bitcoin at like $260 and how they made double their money and how chuffed they are with it. But if you look at it now, you realize that Bitcoin isn't there for you to make a quick buck. It's it's purports to be the future of money. So
it's there to transform the way we transact in the future of money. Exactly. However, the reality is 2020 and the near future we have ahead of us, chances are majority of people are just there to try to get rich, right? And ride that wave. As a Bitcoin enthusiast, however, you have a deeper understanding. And I mean, we can go on for hours, and I'd love to try to spend more time. I don't know if we have the viewers' time to go deeply, but guys, let us know in the comments below. Ask your specific questions, and we will definitely take this forward to a different conversation. To all you bankers out there, drop those questions, and I'd love to arrange more on this topic as we go forward. So back to you, Irshad, Bitcoin enthusiast. How do you see it in terms of time frame of investment? You obviously invest in Bitcoin. What's the game plan? What's the expectation from a wealth perspective?
I think everyone's situation is different. Some people might have lots of commitments or responsibilities, in which case, putting your money in a speculative asset like Bitcoin might not be the best idea for you. Maybe you want more stability. But then there's others who perhaps are, younger, have the ability to take on more risk. Those people would probably be the first to invest versus like someone who has responsibility for like 5 kids or whatever. So everyone's path to Bitcoin is going to be different. I do think that, well, if Bitcoin continues on this trajectory and is a success in the future, everyone will almost be forced to buy Bitcoin. The other option is to watch your wealth depreciate versus Bitcoin. And no one wants to sit with a failing currency or inflating currency. People just with 2% inflation, I think it takes something like 35 years for your wealth to be halved. So 2% inflation sounds innocent, but it's actually over the long term quite destructive to your wealth. So I think if more people understood how inflation affected their money and their savings, they'd be naturally more curious as to why Bitcoin could help them store their hard working time in money. Because at the end of the day, no one wants to be stolen from, and people want the fruits of their labor so that they can enjoy their lives. We live with this Fiat system. you are in a rat race. You got to be in your 60s when you're supposed to be retiring, but you're working like a dog because your wealth just got inflated away. And
But how does then Bitcoin appreciate over time?
well, like if you just look back, if we look at just a supply and demand graph, right?
Right.
As we can see for the past 11 years, demand has just been increasing with each cycle. Obviously, it goes in cycles. It's never, just straight up because that's not realistic.
But up to this point, we've understood that the demand is purely based on speculation, isn't it?
Well, it depends. I mean, we haven't asked, I mean, no one knows why each investor bought Bitcoin. Some people might be speculating. Some people probably have a lot of conviction that, this is going to be the money that people use in the future.
I suppose the question I'm asking is what makes Bitcoin enthusiasts like yourself so confident that it is the currency of the future, that humanity will one day wake up and say, sick of the system around us, we're just going to use Bitcoin? Where do you think that happens in your understanding?
So, like, okay, here's an example. Say you are a regulator and you are employed by the central bank to study this Bitcoin thing and find a way how it can't affect us. As a regulator, once you find out about Bitcoin, you probably will hedge yourself and buy some Bitcoin as a hedge against inflation. So what we have is, and we currently have this, there's regulators around the world who are actually pro Bitcoin because they realize that they realize what's going on. They realize the inevitability of how sustainable are these massive debt levels going to be, how are they going to pay them off? These Bitcoin is a hedge.
So let's say we've got a hedge, right? And let's say we take 1% of wealth, right? Let's just say you buy one Bitcoin, right? Assuming we go into a different bubble and demand goes down again and we at $5,000 a coin, you buy one Bitcoin. Maybe this is this year, next year, but somewhere in the relatively short space of time. What do you think that Bitcoin would be worth, assuming its digital nature and timing of each time the wave kind of increases in 20 years from now?
So that's a really tough question because, I mean, no one even knows what it's going to be tomorrow.
Okay, so I did Google, right? I'll be honest. I can't remember the time frame. It was I saw it. I didn't note it down, but I believe it could have been 20 years from now, or even 10 years. The Bitcoin price is expected to be $347,000. I remember seeing that number per coin, right? So what do you do then, right? With your Bitcoin, the world is kind of changed. It's a hedge in your. What would you do specifically? Are you still holding your coin, or are you getting a bit interested in what this could mean if you sell your coin?
Yeah, that's a tough one because you're always going to be worried about
It's about return, right? Yeah.
So, I mean, people will make their own decisions in terms of like, if you say just suddenly bought a Bitcoin and it went up, let's say 10x, it might be a good idea to maybe invest some of that in real estate or, as a financial planner, diversification is important. So, probably diversify some of that wealth into something that is important to you.
No, of course, I mean, where I'm understanding this in investment strategy, it's more of an asymmetric bet, right? In your proportions of what do I stand to lose if I put 1%, then you've got your choice of exploring and understanding and reinforcing your belief perhaps of the currency of the future. I mean, I'm a big believer in understanding. The show is about opening up to the ideas about where the world is going in your journey to living on your own terms, right? And so you have this choice. If you don't understand and you're on your journey to understand, firstly, you shouldn't. It's speculatory. It's made up as it stands today. There's nothing concrete about the future. In which case, we're seeing institutional investors, according to Irshad, start adopting this because everybody's looking for the return. And so maybe you dip your toes. You can kind of write that money off as a potential hedge. You come up to this point in time. You either find yourself a believer or you convert it. It's relative to what's happening in the world then, but it's absolutely worth this discussion. And Irshad, I want to really thank you. One more question, right? We're talking about asymmetry, right? The asymmetric bet, which basically means, for the guys that don't understand this, is let's say I put $1 million in this thing. What is the upside I stand to gain? And what are the chances I lose $1 million? Is that a 5 times to 1? And you kind of see this in exploring return in the world today in things like structured products when you look at options and shorting different things. And for those that understand investing can start to understand the game that this plays as a Bitcoin in the greater scheme of it. So Irshad, you mentioned institutional investing. What do you see, where do you see the outcome of this? Institutions buying into Bitcoin, this new increased demand. What's happening here?
All right. So I'll give you an example of an institution who recently got into the Bitcoin space. So there's a NASDAQ listed company called MicroStrategy, who are an intelligence software company. So they study technological trends. They sell products to other companies, and so they're in the intelligence game. They had a large amount of cash sitting on their balance sheet. They were a cash-heavy company, and they had realized that with inflation in America, their money, the money sitting on their balance sheet was an ice cube that was melting. Like, no one wants to see their money melt away. And the CEO of the company, Michael Saylor, done his homework. He researched gold, other stock options, real estate, Bitcoin, all of that, and he realized that Bitcoin is the best option they have. So, I mean, obviously, being a company, it's not just up to you to decide what to do with the company's money. He had to talk to the rest of the board, shareholders. So he had a meeting with the board. He gave them the resources he used to bring him up to speed. Basically, it's like a bunch of free content that's on the internet, videos, articles, that sort of thing. Also podcasts with guests debating each other, that sort of thing. So he made this package for the other directors to peruse, and basically they all came to agreement. Bitcoin is the answer. And they went about buying, I think it was 38,000 Bitcoin, but $425 million worth of Bitcoin. That's on their balance sheet. Yeah, it's quite a sizable amount. And
how long ago was this?
I think this was like in the last 3 months. And since then, they're up 50% or $200 million, something ridiculous.
Okay. And institutional investors, kind of friends of friends, in their circles get to chat, right? Let's run a scenario here because it's open-ended, right? Great for the return. It's a good hedge. We know it's largely speculation-based at this point in time. Would it be interesting? What would it mean to you if in a couple of months from now they sell and could go back to holding cash?
Well, I mean, according to the podcasts and everything and the interviews that Michael Saylor done, he's not selling it for 100 years. It's for his kids. But let's say hypothetically we do see them sell. What would it mean?
Well, I mean, it's shareholders' money, right? So behaviorally, the board's decision, his word might be he'll keep his 2 or 3 Bitcoin that he expects to have based on the research be worth a couple of $1 million at some point in the future. He's not lying, but it could be a good short-term move. I mean, this would be interesting to watch, right?
It would be interesting to see how that plays out because so it would obviously there'd be people questioning what their intentions were in the first place. But even if it leads to a dip in the long term, I think the value proposition still exists. If not MicroStrategy, it'll be another company. We also had the CEO of Twitter, Jack Dorsey. He's very pro Bitcoin. He sees a lot of potential in Bitcoin and how it could help the African economy particularly. Africa has been plagued with corruption and failing currencies, and I think if Africa as a whole, or like countries in Africa, could look at Bitcoin as, obviously as a hedge against things failing, they might be able to put themselves.
I get very wary on that example ever since you told me the African bead example. It seems dodgily. I mean, if that's the narrative of corruption in African countries, corruption is largely ingrained and prevalent in the US. Let's put it to you straight, right? And so, I mean, hearing your story allows me to imagine understanding behavior, which is what I try to do. It's such a hard one, man. Which is plaguing technically on the good faith of Bitcoin enthusiasts like yourself, right? And I'd love to see the questions that come in from this, my friend, because this is definitely not a conversation that is finalized in my mind. And I'm going to give it a shot. I'm going to take a look at some of your work, deeply understand what I can, and we'll see if I start becoming more and more of a believer.
If you do go down the Bitcoin rabbit hole, it will probably consume your thoughts as it has mine. And I don't know, maybe all your other episodes are going to be about Bitcoin and how it changes things. So let's see.
Rishad, I'm going to, I would love to hear the angle that bankers and traditionally thought institutional guys have their take on this. And I think this would be fun.
Yeah. So the thing is, Bitcoin is for everyone. So even if you're a banker or the CEO of a hedge fund, or even if you hate Bitcoin, you're probably going to need some at some point. So, instead of buying it when you're forced to buy it, you rather take the time now, learn about it, and buy it while you have the option to buy it. I think that would be a good investment for yourself.
How do you take credit on Bitcoin?
But what do you mean? How do you take credit on Bitcoin? Like
so let's imagine the world. Correct, right? So we've got X amount of Bitcoin in supply at some certain point in the future. It's starting to be a widely, if not widely adopted currency. The world is a better place. It's fair. Where does that concept of debt come into the picture? How do you guys imagine that?
Yeah, so to be totally honest, I'm not too clued up on how that would work. So I wouldn't want to try answer that because I'd be BSing you.
But I'm looking forward to a course on it because this is obviously a field of study and the understanding of it. I am definitely keen on looking more into the subsections of your work, Irshad. And guys, I want you to ask these questions. There's a lot of cuck out there. Everyone can create a coin. And I want to encourage this discussion. I've had a lot of questions around it. Just interest's sake, right? And Irshad is such a legend. He's really versed in it, and you know, sometimes the pace of information is governed by my understanding. Irshad, I want to thank you for your time, and I'm looking forward to the next one. Thank you very much for being here.
It's a pleasure to be here, Nabil. It's been great. And yeah, if anyone has questions, just in the comment section under the video, let's give it a go.
Within reason, guys. Remember the emergency fund first. Understand what it takes. And Irshad says this would be a good investment for you if you understand it first. And on that note, guys, thanks for watching. Share this video if you found it interesting. Let us know again in the comments below. Hit that subscribe button if you're looking for more information around finances. If you want to up your level of knowledge and education, head out to our new website, www.mymoneytalks.co.za. Let us know what you think. Hit that subscribe button, share this video, and I'll catch you guys in the next one.